Well, good morning, everyone. Hope everyone's having a great week and got happy 4th of July coming up here on Thursday. So let's jump right into it, see where rates are at. Right now, let's go over here and share the screen. And rates are down, or excuse me, rates are up a little bit. Pricing's down. Let's go over here, take a look. We've got the 10-year Treasury note right now is up 10 basis points. Let's go down to the charts here. Take a look at that. And you can see we're pushing right up against resistance. We pushed a little bit through resistance, so it's going to be important to see how the 10-year treasuries and how the bond market closes today, see if it backs off a little bit. But right now, we are looking quite a bit stronger, up 10 basis points on the 10-year treasury. Let's go over here, take a look at the mortgage-backed securities, which is down 25 basis points. Holding, where are we at right now? We are down 31. We're here at 99.97, just broke it through the 100 mark. And you can see that the MBS mortgage-backed securities are basically the mirror inverse of the 10-year treasury notes. So we have three reports that came out this morning, and those three reports are two PMI reports and a construction spending report coming from the Census Bureau. Let's head on over to the U.S. Global PMI. Hang on here. Let's share this one. And S&P Global, basically new order. The headlines coming out are new orders rise for a second month running in June. Solid expansion in key staffing levels. New orders rise while production growth softens. And what I find the most interesting part is weakness increase in selling prices in 2024. We're seeing the weakest increase in selling prices of so far of 2024, which means we're really not seeing a lot of push through on inflation. And that's a consistent theme that we're seeing here. Let's move over to the ISM report that came out. Here we are. So we had S&P Global, which we're looking at right now. Now let's shift on over to the ISM report. ISM was showing a little bit weaker with the manufacturing index at 48.5%, but very similar story. We're seeing new orders, which strengthened a bit this month, but still below the 50 mark, which demarks the weakening versus strengthening. We're seeing some production numbers coming in a little bit weaker. Employment numbers down just a tad. So that could be interesting for Friday's employment report that's coming up. That's going to be a big employment report on Friday. And we can see that the PMI manufacturing report was pretty much treading water for the most part for this month. The inventories are down just a little bit, but it wasn't a particularly strong report. It wasn't a particularly weak report. In general, what we're seeing down at the bottom here, we're seeing the overall economy is growing, but it's growing at a slower rate. And the manufacturing sector is contracting and contracting at a faster rate. So by and large, we're seeing a slowdown of the economy. Let's go to the next, to construction spending. And this comes from the Census Bureau. And monthly construction spending in May of 2024 is down just a tad. We're looking at down approximately $2.3 billion, which is pretty much a drop in the bucket, given we're looking at a $2.13 trillion dollar spend for the construction sector. So pretty much a drop in the bucket, but it does look like an economy that has stalled down just a smidge, and it's consistent with what we're kind of seeing in both the manufacturing reports that came out earlier today. So Just want to leave you with that, and we will talk to you soon. Have a great day. Bye bye.